Good morning, guys. Wanted to go over something that I think explains the problem we're in very well. And if you are a person who watches financial channels or listens to the news, you've probably heard people saying the end of the world is coming forever and a day, because that's how they make money and get viewers, etc. So one of the things I want to point out to you is that we are in a unique position today and that it is different. And I just want to show you the math. So right now I'm on what's called usdebtclock.org. It calculates our debt payment and our total national debt, etc. So right now we're living, it's June 1st, we're living in a world where the Federal Reserve is trying to tighten by raising interest rates. Now, I'm going to explain to you why they actually can't do that to a significant degree, and why a lot of people, especially on financial channels, are going, this does not look good for the future. So, let's start over here. The national debt is over $30 trillion. You guys have probably heard that. Here's a staggering number. $91,000 debt per citizen. What? So that kind of puts into perspective exactly how much $30 trillion is. And this number keeps going up, by the way. So if you look right down below it, it says how much we spend versus how much we overspend. So deficit spending is what we spend over in tax receipts. So if we take in about $4 trillion in tax receipts, we're spending $6 trillion. And that number, this deficit number right here, is slated to go up. Okay? So who cares? We keep getting more and more debt. We've been in debt this whole time. What's the big problem? Here's the problem. If you notice, we've been in debt here in 1960. Our GDP, our percentage of GDP to debt ratio was 52%. It went down in the 80s, and then in 2000 it was 57. But we had a little bit of a blowout sale the last couple of years, and now we have 129% debt to GDP. What does that number mean? It's mathematically impossible to get out of debt, and the debt has to continue to grow. It's mathematically impossible. And why that's important is the government has to keep spending this and has to keep this number growing in order for this whole machine to work. Why? Because if you look down here, Medicaid, Medicare, and Social Security, see these numbers? They take up a lion's share of our spending every year. And those are liabilities that must be paid by law. They have to be paid out. So it's not discretionary. They don't debate it in Congress. And as more people retire, these things go up. These numbers go up. Now, could the tax receipts go up in relation to this? Yes. But at the same percentage rate, the answer is no. And here is the kicker. Interest on debt. That is what the Federal Reserve is thinking about. Why? Because if we take in $6 trillion and the Fed is raising interest rates, and our deficit's already almost $2 trillion every year, as the Federal Reserve raises interest rates, the interest rate that the government pays on its debt goes up as well. Who does the government owe this money to? They owe it to treasury holders. Now, a lot of people, and that could be individuals, by the way, and other countries, etc. But the United States Treasury takes out on debt by selling treasuries, which is a promise to pay in the future with interest. And that interest is based off of a lot of factors, but a big one would be market rates and what the Federal Reserve's interest rate is. So as the Federal Reserve raises interest rates, this payment goes up. Doesn't even matter if we take on more debt, this payment goes up. Now, a lot of the debts in the United States on the treasury-wise, are short-term treasuries, 2 years, etc. So as they roll that debt over, They have to pay more interest because interest rates are going up. So if this was you, if you were a person with a credit card and you kept taking on more debt over here in order to pay the interest on the debt that you had already incurred, you would see that that's a problem. And some people think the solution would be, why doesn't the United States just not pay? That's a good question. And to that I say, what if you didn't pay your debts? What happens to your credit score? Credit score goes down, and if you were to take on a loan, the interest rate goes up because people are taking on more risk to loan you money. Same thing happens with the United States and the treasuries. If they default, and this is a big maybe people would want to buy treasuries again, maybe. But if they default, what if somebody was going to loan the United States money, they have no guarantee of getting paid back. So the only reason people loan money to the U.S. government in the form of buying treasuries is because there's a guarantee, and the United States has a track record of paying back. If they were to default, no one's loaning the United States money anymore. And if they are, it's at a very high interest rate. So that's why they won't default. And this interest payment will get paid. It will get paid. And so if they have to cut, you know where they're going to cut? Over here. Social Security, Medicare, Medicaid, and potentially defense. This is like the only discretionary. But at some point, the math is untenable because as this keeps raising, this keeps raising. And you know what doesn't raise? This. Because when you're in what looks like we're going into a recession, and this is U.S. federal tax revenue, as we go into a recession, tax revenue goes down. Especially in the capital gains area. Because if people are not making money on stocks, obviously capital gains go down. And as inflation goes up, unemployment goes up, government bills go up too. Because they pay unemployment. They also pay Social Security in relation to inflation. So what's the bottom line? Bottom line is the Federal Reserve, this whole system relies on more cheap money coming into the system. And the Federal Reserve is bluffing when they say they're actually going to raise interest rates to kill inflation. What I assume will happen, my base case, is that the Federal Reserve will raise, and they're trying to destroy demand by causing a recession, not by actually raising interest rates above the rate of inflation, because they can't do that. So as they destroy demand with a recession, then they're going to have to reverse course, go back to quantitative easing. Speaking of quantitative easing, quantitative tightening started today, and we'll see how far they get with that. And quantitative tightening is selling the $9 trillion in assets on the Fed's balance sheet into the open market. The question is, who wants to buy treasuries or mortgage-backed securities that have a lower interest rate than you could buy in the open market today? So is the Federal Reserve going to take a loss on those if they're going to sell them? Yeah. But this system has to grow. The easy money has to pay off the old debts and then gather new debts, etc. So if you're a person in this system in the United States, which all of us are, you look at this and you should draw a couple conclusions. This is bound to fail. It's bound to fail. And if it's bound to fail, how are you going to get out of the system? You have a choice to make. You can continue in this system where money is created out of thin air, and it affects things like stock prices. If you look at the stock market, you think, how in the world in 2020 was it going up when no one was working? It's because of free money. And price to earnings ratios on stocks are out of whack. They're insane. In the stock market, a lot of people say it's fake because it's all based off of easy money. It's not. Most companies aren't valued off their revenue anymore. So what I recommend doing is look into alternatives that are outside the dollar system. That could be gold, silver. That could be things that you can't print more of. That doesn't mean stock certificates. It means things like commodities. I am a huge fan of Bitcoin, but this if you come to this conclusion, this isn't going to solve itself. It's not going to magically, the debt's going to disappear and everything's going to work out. So if you have people in your life that are like, oh, I've heard it all before, the world's going to end and all this kind of stuff, that's true. People say that stuff all the time. But if you look at this math, you go, this number has to go up, which means this number has to go up, which means the deficit has to go up. And that's just going to continue. And if you look at the track record of the national debt, it has had to go up every single time. And the United States one day will be faced with a decision. And that decision will be, do we just inflate our way out of this? What do you think politicians are going to choose? Cutting Social Security and Medicaid, or printing more money? What do you think politicians are going to choose? Track record shows print more money. That's how we got to this situation. That's how they're going to get their way out of it, because in these 4-year terms, they don't want to be the person who this whole collapse happens on their watch. And it will happen. And it's happening around the world right now in emerging markets and smaller countries, because they're reliant on dollars as well. And as the Federal Reserve tightens, dollars are harder to get, and they need dollars to buy things like fuel. And they have to print their money in order to get dollars. Take a look at Turkey. They're inflating because they have to print their currency in order to get dollars in order to buy fuel. So this, as Manarino says, this mechanism of more debt and more free, easy money has to continue, or this whole thing collapses. So the Federal Reserve has a choice. Do we collapse the system today, or do we just keep kicking the can down the road? It's going to collapse eventually. They're going to keep kicking the can down the road. All right, let me know what you think of this stuff. If you have friends in your life that you're trying to warn, you're saying, hey, this isn't good, and they think you're a kooky tinfoil hatter, I hope math is somewhat bipartisan. And if we can look at the math, and we can look at this is a great resource, usdebtclock.org. If we can look at this, you can think, hey, this is a problem, and there's no way out of this. And therefore, you can assume, I'm going to make the assumption that the federal government's going to continually print. And they're bluffing with this inflation talk right now, but they're going to continually print, in my opinion. So you got to get your butt out of the system, in my opinion. All right, thanks for watching. Thanks for listening. I'll see you guys in the next one. Peace.